In continuation of the previous class, we take up limitations of management accounting. Management accounting is very useful tool of management. However, it suffers from certain limitations. First limitation is management accounting draws the information from financial accounting and other records. The strength and weakness of managerial accounting therefore depends upon the strength and weakness of these basic records. So we can also say the management accounting helps the management in making decisions for the future, but it is mainly based on the data collected from financial accounting and cost accounting. So this information is used for making future decisions. The accuracy and dependability of such data will leave their mark on the quality of managerial decisions. Similarly, second limitation is conclusions arrived at by management accountant are insignificant unless they are properly executed. So the management accountant generally have knowledge not only financial accounting and cost accounting, but also many allied subjects like economics, management, taxation, statistical and mathematical techniques. But due to lack of knowledge relating to these decisions, whatever the conclusions that are arrived by the management accountant are insignificant. Okay. And the third limitation is management accounting cannot be a substitute for management. It is only a tool for management. So whenever the management accounting provides the information for taking decisions, then we can say it is not a substitute of management and administration. Fourth limitation is installation of managerial accounting system requires heavy cost. The amount which is involved in installation of management accounting system is a costly affair, and it requires a wide network of management information system, rules and regulations. All this requires heavy investment and small concerns may not be able to afford it. And the next limitation is it calls for rearrangement of personnel and their activities, which is generally not liked by the people. So the existing staff or existing accounting and management staff may not welcome the introduction of management accounting system. And the people who are involved in maintaining the accounts and various activities that are set up by the organization may not be taken up in a serious manner, and similarly taking up any activity or initiative is not liked by most of the people. And the last limitation is managerial accounting is still in initial stages, therefore it has some impediments. We can say management accounting is a relatively recent concept and it has not fully developed. This limits the utility of this system to management in making perfect and correct decisions. So this is how the limitations of managerial accounting helps us to know how the management accountant cannot take decisions and lead these decisions for the success of the organization. Now let us focus on the relationship between cost accounting, management accounting and financial accounting. So as we have learned, cost accounting is the process of accounting for costs. There are certain ways of recording the cost. Similarly, the scope of cost accounting is also limited to providing cost information for managerial uses. When we talk about management accounting, it involves collecting the information, analyzing the information, interpreting and presenting the information for the management. So it is closely associated with management control, which comprises planning, executing, measuring, and evaluating the performance of an organization. So, management account draws heavily on cost data and other information derived from cost accounting. So, management accounting has a wider scope as compared to cost accounting. We have understood management accounting is broader than the cost accounting as it provides all types of information, that is cost accounting information and financial information for the decision of management. So, management accounting is an all inclusive accounting information system. It is not a substitute for the other accounting functions, but it involves a continuous process of reporting cost, financial, and other relevant data in an analytical and informative way to management. Financial accounting and management accounting are closely interrelated, since management accounting is to a large extent rearrangement of the data provided by financial accounting. Moreover, all accounting is financial in the sense that the accounting systems are in monetary terms and the management is responsible for the contents of the financial accounting statements. Now, let us understand the differences between management accounting and cost accounting. The first and foremost object of management accounting is to provide information to the management for planning and controlling the activities of the business. In the same way, the objective of cost accounting is to ascertain the cost of the product or service. It also deals with the cost control, matching of concepts with revenue and decision making. And the second point of difference is scope. The scope of managerial accounting is very wide. It includes financial accounting, cost accounting, tax planning, reporting to management, and so on. Cost accounting is primarily deals with the ascertainment of cost, and it provides information for the managerial use only. And the next difference of managerial accounting and cost accounting is nature. The nature of managerial accounting is generally concerned with the projection of figures for future. Cost accounting uses both past and present figures. In management accounting, the data used is either qualitative or quantitative and quantitative data. In cost accounting, only quantitative aspect is recorded. Qualitative aspects are ignored. In managerial accounting, there are certain policies framed by the organization. So there are no specific rules and procedures to be followed. Simply we can say there are no thumb rules in managerial accounting. But in cost accounting, certain principles and procedures are followed for recording cost of different products. And the next difference is object of managerial accounting is designed for providing information for internal use by the management. And objective of financial accounting is designed to supply information in the form of trading account, profit and loss account, and balance sheet to external use. And what is the subject matter of managerial accounting? Managerial accounting deals separately with different units, departments, and cost centers. Financial accounting is concerned with assessing results of whole business, entire business. Managerial accounting is not compulsory, but financial accounting is compulsory in certain undertakings. In case of sole trader type of business, partnership type of business, there may not be any compulsion. But in case of corporate entities, financial accounting is compulsory. The managerial accounting has not emphasized to actual figures because it collects the information from financial accounting and cost accounting. Financial accounting records actual figures. Managerial accounting records both monetary and non-monetary events. Financial accounting records only monetary events. Similarly, we have few more differences. Managerial accounting is used to take the policy decisions, so method of presenting data differs from concern to concern. In case of financial accounting, financial accounts are concerned and governed by the generally accepted accounting principles and conventions. Managerial accounting supplies information from time to time during the whole year, whereas financial accounting is prepared for a particular period. Managerial accounting cannot be audited, but in case audit is adopted, we call it as management audit. But in case of financial accounting, accounts are audited and there are different types of audits in financial accounting. So this is how we understand the differences between cost accounting and management accounting, financial accounting and management accounting. Thank you. Siprada, ready na?